You talked about in your report, too, about the amount of money that they're piling into AI, the cost pressures when it comes to games that could impact their margins. But overall, how is Tencent doing in terms of monetizing that investment into AI now?
Yes, there's plenty of news out there that AI is not a cheap technology to get into. Building out a large language model is extremely expensive, and then you've got the issue of the chip shortage from NVIDIA, etc., to deal with. How are they going to monetize it? The main ways is really a feed-in for their cloud computing business. So by either providing the tools or the software to corporates to build out their AI systems, Tencent, Alibaba, and others want these companies to do their development on the cloud system and monetize it that way. So really, it's the cloud business which is the key monetization driver here.
And I can't help but think whether Tencent might be following the path of Alibaba and delivering value by breaking up some of those units. And I'm wondering, do you have a take on that?
Yeah, well, I would say obviously the earlier political and regulatory pressure we saw in the sector, having two large omnipotent companies dominating your tech sector is probably not a good thing for any country. There was a value realization argument in favor of breaking Alibaba up, coming from shareholders. The same argument is maybe less strong with Tencent, but again, to have a very dominant player, is that stifling competition? Is that preventing other new companies from coming up through the ranks? I would say, that is an issue within the China tech sector in general. So will we see a breakup of Tencent at some point? It's less likely, but it's not impossible. So if we get a value realization for shareholders coming from that, if it makes a more level playing field within China tech, then that has to be a good thing.